Hey, what's up, everybody? So today I'm going to be taking a look at three different stocks that are just really beaten down this past year. I'm going to take a look at some of the fundamentals and just tell you how I'm trading them. I'm not necessarily just buying stocks, I'm doing options with it. And so take a look for yourself. There's not any kind of financial advice, but rather just some stocks that I'm eyeing myself that perhaps you can take a look into as well. Okay, we're going to try and fly these through as quickly as possible. And pulled up a lot of the tools that I normally use, just take a quick look. And so the first stock ticker is just DISCK. Oh, that's kind of long, but it is Discovery stock. So Discovery stock is trading at $23.57 right now. As you can see, the P ratio is at 12.58, so that's pretty low. It has a pretty big market cap of $12 billion. This stock is just down 10.7, almost 10.7% this year. And so it's gotten beaten down pretty hard. But taking a quick look at FinViz, okay, so DISCK, let's just kind of look at some of the fundamentals of the stock. So right now, again, it is trading at a really low PE, forward PE of 7.3. Okay, so the RSI is at 52, so it is slightly overbought, but that's pretty good, healthy range. Yeah, so I think that's good to see. Taking a quick look at the financials of DIC Discovery. Okay, so we're going to take a look at the financials on Yahoo Finance. So it looks like the revenue is actually still pretty healthy. Okay, it hasn't grown a lot this year, but at the same time, it hasn't really gone down. It has gone up a little bit. And so taking a look at their EBITDA, their profit is very, very healthy. They're making great money. So I don't understand why the stock is down. Maybe you know. If you do know, comment below. Let me know your thoughts. So the way I would trade Discovery is probably I would just go ahead and buy some shares. But at the same time, I would definitely be looking into a leap option. And as I've covered in this channel, okay, leap option is basically when you buy a call option that expires in a year or more out. Okay, so I would set my expiration date to January 2023. I'll buy a call option, usually in the money, so just below the share price. And I will probably just go ahead and buy the 17.5 at $7.85 a share. So that's $785 opening up this contract. The stock would really only have to move up about 7%. 7.5% for me to make a profit, and in the meantime I can sell calls in between and still make money off of that. Okay, so I could sell, that would be called a poor man's covered call, which I just made a video on. I can sell calls and make premium. Okay, so that's how I would trade Discovery stock. And just the next stock ticker I'm looking at right now is MELI stock. Okay, so MELI, Mercado Libre. Okay, Mercado Libre is the Amazon of Argentina. As you can see, the year to date, it is down 23%. Okay, so right now it is down quite a bit. It is trading at a really high P ratio, but that's just because it's definitely a growth company. Taking a look real quick at FinViz, we can see that, okay, so right now, the stock is trading at a pretty even RSI of 50. Okay, so it's not really overbought, not oversold. P ratio is super high because it is a growth stock. Let's take a look at some of the financials. Okay, now if you're not really into growth stocks, I would definitely skip this and move on. But sometimes growth stocks have a lot of potential especially if you think it's going to move upwards in the next year or so. So as you can see, this is why it is considered growth stock, because it's growing rapidly, right? The revenue has almost doubled, this year. Taking a look at their EBITDA, so their profit is not nearly as big, but their revenue is growing very, very quickly, and that's the reason why the stock has continued to grow so quickly. The way I would really honestly trade Mercado Libre if I do open up an option is I would not buy stocks, shares, okay, because I don't want to spend too much of my cash on just this one stock. I would do a put credit spread, so I would go ahead and set my expiration date. I would do one that's pretty far out. You don't have to do super far out, but just by the period of time when you think eventually it's going to have a turnaround. And I would give it up until June or even September for this stock to turn around. And the way you open up a put credit spread, remember you're selling a spread. Okay, so you're collecting premium as soon as you open up this trade. Okay, so you would go ahead and buy a put. You would sell a put first. okay, at a strike price. So I usually just go one strike price underneath the current share price, and then you would have to buy a put to offset that put that you just sold. Okay, so that really just minimizes your risk and gives you a hedge against the put that you just sold. So now, as you can see from Robinhood, if the stock doesn't move down by over 1% by September 16, 2022. So in other words, if it goes up or if it moves sideways, so long as it doesn't go down by more than 1%, you're going to make $1,000. You're going to keep $1,000. Now, if it goes down below that, you're going to lose almost $1,000 as well. So this is really a bet saying that, okay, I believe MELI stock is going to be up by September 16, 2022. And keep in mind also that you can really close out this position before that as well. Okay, so you don't have to hold on to this spread until September 16th, 2022. Okay, so the next stock ticker I'm taking a look at is SWKS. Okay, so Skyworks Solutions. It is a semiconductor company headquartered in Irvine, California. As you can see, year to date, it is only up 1.79%. Okay, so that's very, very low for a semiconductor company. In the last 6 months, it's been down 16%. So that is pretty pretty upsetting for Skyworks Solutions. But let's take a look at some of the fundamentals of SWKS. So as you can see, right now SWKS is trading at a really low PE ratio of 17.10, forward PE ratio of 11.92. PE ratio just means price to earnings for this year and next year. RSI is at a relatively over sold at 45.57. And they're making great money, right? Like earnings per share this year, great. Next year, still pretty solid. Let's take a quick, their market cap is $25 billion, so that's a very, very sizable company. Let's just take a quick look at their financials and see how they're doing. So Skyworks Solutions, we'll take a look at the financials. Okay, so it looks like they're still growing at a pretty healthy rate. They've grown year to year. They went down a little bit in 2019, but they've grown ever since then. They're a bit, so they're making great money, so their profit margins are solid. So I don't know why this stock is continuing to go down. Maybe you know, comment below if you know. It would be very helpful for me and for all the other viewers as well. Okay, so but otherwise, I do think this is definitely a buy at this point. So taking a quick look at SWKS. So I would probably just simply buy out shares because it does pay out a little bit of a dividend, so 1.46%. I would probably pick up some shares, but if you don't want to pick up a lot of shares because the stock is trading at about $150, then you can definitely do credit spreads. Okay, so you can do credit spreads, or you can buy a leap option. Okay, so leap option, or you can sell a put. Okay, so selling a put is actually probably the most likely what I would do. Selling put just basically says, okay, like if the stock goes down to a certain price, you're more than happy to pick up, some shares. And so if I were to sell a put at 140, I would be making, okay, so there's not a lot of volume in this. Okay, so let's take a look at 150. Actually, okay, so I wouldn't sell a put because there's not a lot of volume, but I would definitely consider opening up a credit spread as well. So you would do the same as the last trade. You would go ahead and sell the put, and then you would buy a put underneath that to offset it. And so now the stock does not go below 4% by August 19th, 2022, you're going to make $233, and you're only risking $267. Okay, so that's a pretty good trade in my opinion, especially if I do think SWKS is going to go up. If you like this kind of content, if you like this kind of video, make sure you like that button for the YouTube algorithm. I would really appreciate it. Comment below if you have any questions, and make sure you subscribe if you want more videos like this. Until next time, guys, I will see you around in the next video.